Hey everyone, welcome back to the channel. Today, we're diving deep into Canada's housing market crisis, and what I'm about to show you might completely change how you view the current market situation and your investment strategy. If you've been wondering why housing prices seem relentless despite higher interest rates, or why finding an affordable place to live feels impossible, the data I'm about to share explains everything. Let's start with the most shocking statistic. Canada is building virtually the same number of homes today as we did in the 1970s. According to recent research from the Fraser Institute, we're constructing around 250,000 housing units annually, almost identical to the 239,458 units we built annually from 1972 to 1979. Here's where it gets alarming. In the 1970s, Canada's population was growing by about 280,000 people per year. Today, that number has exploded to over 850,000 annually, a threefold increase. This means we're building at 1970s levels while experiencing unprecedented population growth. In 2023, this imbalance reached a breaking point with 5.1 new residents added for every single housing unit started, the highest ratio in over 5 decades and far above the long-term average of 1.9 residents per unit. But wait, the situation is actually worse in certain provinces. Looking at Ontario specifically, housing starts have fallen to levels not seen since the 2009 financial crisis, a staggering 32% drop. According to recent data from CMHC and BMO Capital Markets, Ontario is seeing the fewest construction starts since the global financial crisis. This collapse is particularly concentrated in the condo market. Urbanation reports that in the Greater Toronto-Hamilton area, only 497 condo units started construction in the first quarter of 2025, the lowest number in 29 years and down 79% from the same period last year. At this rate, 2024's record year of completed condo deliveries, 31,404, could fall to just 10,000 deliveries by 2028. So why aren't builders constructing more homes despite skyrocketing prices? There are several factors: development costs and fees, government taxes, development charges, and regulatory costs have made many projects financially unviable. Labor and material inflation, construction costs have soared due to labor shortages and material price increases, some related to tariffs and trade disputes. Higher borrowing costs, rising interest rates have made financing new developments significantly more expensive. Investor exodus, pre-construction condo sales have collapsed as investors flee the market due to negative cash flow projections and uncertainty. Joseph Feldman, COO at condo developer Camrust Felcorp, describes the current environment as having more uncertainty than in a long time, since the early 90s maybe, and that has created paralysis. Many developers are holding off on land purchases and delaying construction starts. The pre-construction market has been hit particularly hard. Recent data shows some shocking examples. Investors who bought pre-construction condos in Toronto's Lynx development are now facing losses of up to 38% when selling on the resale market. Units originally priced at $1,387 per square foot are now selling for around $850, representing losses exceeding $200,000 for some owners. This disconnect between pre-construction pricing and current resale values has led to multiple project cancellations, with at least 4 developments totaling over 1,000 units already scrapped in 2025. Now let's address the immigration question. Canada welcomed a record 1.23 million new residents in 2023, more than double the pre-pandemic record set in 2019. While this has slightly moderated to 951,517 in 2024, it's still historically high. But here's what many people misunderstand. Immigration itself isn't inherently problematic for housing markets. The issue arises when population growth significantly outpaces housing construction, which is exactly what's happening now. Some argue that slowing immigration would help balance the housing market without increasing construction. Others point out that immigrants are vital to addressing Canada's labor shortages, including in the construction industry itself. The solution likely involves both recalibrating immigration levels and dramatically increasing housing production. What about foreign buyers? The federal foreign buyer ban implemented in 2022 has had limited impact on market dynamics. Why? Because non-resident buyers were already a relatively small percentage of the market by the time the ban took effect. The more significant factor is the overall investment climate. Many domestic investors have retreated from the market due to negative cash flow concerns and economic uncertainty. Meanwhile, projects that might have attracted foreign capital are being delayed or canceled due to financial feasibility challenges. Given these fundamentals, what does this mean for housing prices going forward? Despite higher interest rates tempering demand in the short term, the severe structural supply shortage means prices are unlikely to experience a significant correction. In fact, as interest rates eventually moderate, the massive imbalance between housing supply and population growth will likely drive prices higher. The math is simple. When 5.1 people are competing for every new housing unit, the pressure on prices is relentless. Unless there's a dramatic increase in construction or significant moderation in population growth, affordability challenges will persist. Despite these challenges, the current market presents several opportunities for savvy buyers and investors. Distressed investor properties. Look for resale units from pre-construction buyers who are facing negative cash flow and willing to sell at discounts to exit their investments. Regional arbitrage. Consider regions like Alberta, where construction remains robust. As BMO economist Robert Kavchich noted, activity in Alberta is holding up much better and is in fact near record levels. Renovation potential. With new construction limited, properties with renovation potential offer significant upside as buyers compete for limited housing stock. Long-term perspective, if you're a first-time buyer waiting for prices to drop significantly, the fundamental supply-demand imbalance suggests this strategy may be risky. Getting into the market now, even if it means starting with a smaller property, could be financially prudent given the long-term supply constraints. What would it take to resolve this crisis? Several policy approaches could help. Streamlining approvals, reducing bureaucratic delays in the building permit process could accelerate construction. Reassessing development fees, municipalities could review and potentially reduce charges that make many projects financially unviable. Incentivizing construction, tax incentives, or subsidies for affordable housing development could stimulate building. Managing population growth, carefully calibrating immigration targets to align with housing construction capacity, addressing labor shortages, investment in construction trade education and training could help expand building capacity. Now, if you're feeling overwhelmed by all this information and wondering how it applies to your specific situation, I'd love to help. As a licensed Level 2 agent, I can assist with both real estate purchases and mortgage solutions. Whether you need help finding properties in this challenging market, evaluating investment opportunities, or restructuring your existing mortgage to better suit today's economic reality, I'm here to provide personalized guidance. Just click the Calendly link in the description below to book a free strategy call. During our conversation, we can analyze potential home purchases, review your mortgage options, or discuss any other real estate questions you might have. This no-obligation call is your opportunity to get clarity on your next steps in this complex market. Canada's housing crisis is fundamentally a supply problem decades in the making. Building at 1970s levels while experiencing triple the population growth has created a structural deficit that will take years to resolve. Whether you're looking to buy your first home, upgrade to a larger property, or invest in real estate, understanding these dynamics is crucial to making informed decisions in today's challenging market. If you found this analysis helpful, please hit that like button and subscribe to the channel. And don't forget to tap the notification bell so you never miss future updates on market trends and investment strategies. If you know someone who could benefit from this information, maybe a friend looking to buy their first home or a family member considering an investment property, please share this video with them. Your support helps me continue creating valuable content like this. Stay savvy, stay informed, stay knowledgeable, and until next time, may your investments flourish and your dreams of home ownership become a reality. Catch you in the next one.